And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California, where it is nice and early. Yes, I wanted to get in and make a video here today before I get on to surgery. Hopefully all goes well, and I might even be back in the office by the end of the day. But what do we got going on today? You know, remembering in the back of our head that the Federal Reserve is responsible for their federal mandate, and that is what? Keeping inflation under control and unemployment, something to do with employment, right? They're trying to keep people in the workforce, and gosh, what is the federal mandate here today? What is the federal mandate? Da 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 da. What is the Fed's mandate? Price stability. The Federal Reserve System has been given a dual mandate, pursuing the economic goals of maximum employment and price stability. And they get to use their various tools to manipulate the markets. And oh boy, I wish I had some of those tools, including getting some of these numbers in advance would be really nice, because you know they're not just popping out the economic data at 5:30 this morning because they didn't already have it last night, right? And what happened today? Initial jobless claims came in at 219,000, hotter than expected. It was an increased level from 193,000, the expectation. So essentially, more people lost their jobs, and that came on the back of news yesterday that job openings fell from, I believe it was 11 million to 10.1 million. So the old saying, bad news is good news at the moment. Why is that? Well, essentially, these type of numbers are supposed to tamp down inflation and show that the Federal Reserve's tools are working. But let me ask you this, and you can put your comments in the below. Comment down below. Jobless claims fell from 219,000 to 193,000. So we're talking about a gap of 29,000 jobs. Do you think that makes a difference? Because 29,000 people lost their job, they're going to spend less money. And because there are less job openings, right? That means essentially less people are going to get a job that pays more, that allows them to buy more stuff. I think the numbers are pretty weak. I think the number yesterday was actually a little bit better for the Fed. But in general, I want to get into these charts because the charts don't lie. The numbers do. We know the Fed's lying, the government's lying, and the charts, they tend not to lie here. So what is my concern in regards to, kind of our downside move that we've been expecting and been looking for, because the market moves a lot faster to the downside than it does to the upside. And this is the chart to rule them all, the good old dollar bill, Dixie, right? So when the dollar go up, bad for risk on assets like stocks. When the dollar go down, it's good for risk assets like Bitcoin and like NASDAQ and S&P, et cetera, et cetera. So what do I have to say again about the US dollar? And here would be my, initial fear for us missing the downside move. Is this. We've got three higher highs. In my book, this is the 2 drive variety, right? So we got 1, 2 higher highs and 1, 2 lower highs in RSI. That's classic bearish divergence, which should give us a move down to this 21 coming in, at about, at about 107.53. Now, how would we confirm this as a local high? Well, we need to see a closure below 111.62. 111.62. Now, what I want to do is take a look at the lower term time frames to kind of get a bias on whether or not this is going to play out. And tomorrow, non-farm payrolls come out. And then next week, you've got PMI and CPI, other, massive events for, and this is, by the way, an economic calendar. You can go to myfxbook.com, hit economic calendar, and it will actually give you a lot of the data points or the big numbers that are going to come out and whether they're, expected to have a high impact on the economy or a low impact. Tomorrow morning, 5:30 a.m., the unemployment rate will come out. Hourly earnings, year over year, so those are medium. So it's the risk of the wage price spiral that the government is trying to avoid, where wages are going up faster than inflation. So that should, be interesting tomorrow. Wow, it even has the previous number and the consensus. So let's see if that lines up on today, October 6th. We just got, later today, total vehicle sales. So what did we just get? Oh, look at that. And then we get the actual number. Oh, that's interesting. So initial jobless claims, 190,000. We came in at 203. The actual was, 219. Okay. So anyways, I believe, so all these numbers just came out this morning at 5:30 a.m. And then going back to, it doesn't go back to yesterday. If I hit yesterday. Anyways, I'm not going to revisit this. This is enough about jobless claims, job openings. That was part of what the Fed said. They wanted to see a rebalancing of job quits versus job openings. And how is the dollar responding? Well, on the 4-hour time frame, I forgot if I drew this box in here yesterday. I do believe I did. As the dollar was rallying yesterday, I said, hey, I'd like to see a little pullback off the green 55 and perhaps a bounce off of this green box. Now you say, well, how did you draw that green box? Well, how did I draw it? Actually, it was on a bearish retracement, excuse me. It must have been a bearish retracement. Nope. Yeah, on the 4-hour time frame it would have been. So from the high to low, from the previous high to low, you get the 0.5 and the 618, and that's typically where you're gonna see your, higher lows put in, and that's how I drew the box yesterday. We got a perfect bounce there. And as, again, the dollar goes up, typically Bitcoin goes down and it is rallying. So this is, as I kind of suspected off of this news, it wasn't that bad, right? Job openings fell, job openings versus, sorry, again here. It's a little bit early. My brain's just turning on. I need to get this Celsius in me before I fall asleep here at 6 a.m. Unemployment rate was 1% for the week of September. And initial claims was 219. And it fell from 193,000 to 190,000. So again, jobless claims were up. Jobless claims were up. Anyways, back into the charts. You know, sorry about being a little bit all over the place there. I hate when other channels do that. It seems like they just rant and ramble for a minute and they don't know what they're talking about. But that's what happens when you do this with no script and you're just going fresh into the charts and respecting the levels we had been talking about on CME on the 4-hour time frame. And why did I have these levels? I'll just point it out to you here. Is this guy right here, this little wick back here, this little baby wick. So if you're playing out the silver cross to the downside, if you're trading that with that strategy, typically after the cross, you're going to use the prior wick as your stop loss, your risk management, and we all know it as traders out there, and actually would have got stopped out. Which tells me there is a bit of a higher chance that this does get resolved to the upside. Any kind of a 4-hour closure, again, above, call it 20,505, call it 20,500, whatever. Now I'd adjust it to this wick right there, okay? Any kind of a 4-hour closure back above there very likely gets you the next move up to 21,500. And that very likely bleeds on into the higher term time frames. And so it's a bit of a sideways market here. Actually, it's been a sideways market since September 13th. So we've had about 2 weeks of sideways action here. And this is a bit of a consolidation on the 4-hour time frame. Do we have any bearish divergence? Yes, we do. And it's of the 2-drive variety here. Yes, 2 drives of bearish divergence. So again, what is that? Or hidden bearish divergence, where price is making a higher high, RSI is making a lower high, and that typically gives you, that's 1 drive, gives you a drive shot down to the 9. 2 drives to the 21, 3 drives to the green 55, and 4 drives to the 1618. That is what I'd be looking for on this guy. And actually you can see here, just pointing this out here really quick. We spoke about it yesterday, or just a minute ago on Dixie. Is the pullbacks typically go down to the 0.5 or the 618. And when you do close back below the 618, coming in at 19,600, that's very likely range resolution, and you're heading on back down to doggy town. So could we raise that up to 19,775? Very well could. You know, this is from the spike low to the spike high here. And it's just lining up very, very good. So, what else do I want to take a look at on the lower term time frames? And again, Bitcoin is going to rule the market here. Whatever Bitcoin does, the altcoins are going to do more. So just bear that in mind if you're trading in the altcoin space. And on the lower term time frames, do we have any of those divergences? Well, we can see a couple drives here on the hourly time frame. And again, what does that line up with? So we got low volatility, momentum to the downside here, and call it call it a, so we got 1, 2, and if this confirms as another lower high, you know, I would expect 1, 2, 3 drives, gets you shot to the bottom side of the range, which is going to come in at 19,865. Again, this is the area to be watching. So it was kind of our previous breakout level that we'd been talking about. 19,695 gets you a move up to the top side of the range at 20,000. I think we were saying 2,200. 20,525 is going to be the line in the sand. So this is going to be a very important resolution. And with non-farm payrolls coming in tomorrow, that is all the people that are not working on the farm, right? Let's see if we can get a little definition on this. Non-farm payrolls tomorrow. Today is the 6th. Tomorrow is October 7th. So we get the unemployment rate. 3.7% is the expected and the consensus here. Average weekly payrolls. Which one is more expensive? Private participation rate, manufacturing payrolls. So see, it says high. So non-farm payrolls is expected to come in lower than expected. The previous was 315. They're expecting 250, and it's all about the expectation versus the reality. So what are they talking about here? Too many advertisements in this picture. Keep up, blah, blah, blah. No. Okay, monthly unemployment produced on the Friday of every month. Non-farm payrolls have a significant impact on the value of the U.S. dollar, the bond market, and the stock market. As per the Bureau of Labor and Statistics, the current unemployment statistics program conducts surveys. Approximately 141,000 business and government agencies. Oh, so all the numbers are skewed anyways, which represents 486,000 individual work sites in order to provide detailed industry to blah, blah, blah. A higher than expected figure should be seen as a positive bullish for the USD, while a lower than expected figure should be a negative or bearish for the USD. So that would actually line up. You know, if it's bearish for USD, dollar go down, Bitcoin go up. And so what could that line up with? Well, we were talking about it yesterday and saying, hey, what do we have on the daily signature here, which the average move for the dollar, when we get this signal here, and we define this signal is the BBWT, the Bollinger Band with percentile. When volatility gets low, what do we expect in Bitcoin land? We expect volatility to increase, and we're going to get a volatile move here. And we see, I mean, you know, you could almost say this signal is correct, or excuse me, is initiated at this point. We see volatility expanding, positive momentum on the moving average. What I like to see personally is a volatility expansion above 20%. So that would tell me the move is in full force. We're not quite there yet, but some people like to take it sooner than later. And the stochastics have gotten the correct direction of the move 80% of the time. So again, this is statistics and probabilities. It's not an exact science. It is more of an art form. So what do I think could happen here? Non-farm payrolls comes out tomorrow, worse than expected, which would be bearish for the dollar. Bearish for the dollar, and Bitcoin pops up to this green 55. I personally don't even think we're going to defeat the green 55 here. So I would expect an initial pullback from this region. That's just kind of how the green 55 works. The green 55 has, since the silver cross way back here, and again, how do you play these crosses? Well, you want to see price action sucked up into the cross and spit back out, and that's exactly what we got right here. And then where would your stop loss? So if you're playing this cross early on, which was a very nice cross, we had the death cross right there. Price action sucked in, spit back out. We got the silver cross. That's a purple 200 in the green 55. Here's the silver cross, sucked in, spit back out. And never came back to even test it. So you would have entered. So you got to have an entry, an exit, and a risk management. This would have been a beautiful trade. Entry, risk management, and then where do you take the profit? Well, that's the big question, and a lot of people don't cover this type of information, and that's why I'm gonna talk about it right now. So typically what you want to do is wait for volatility to get maxed out somewhere around the 90 percentile. Some people will take it at 70 or 80%. I like to wait till we actually see volatility completely maxed out. And then what happens? Well, volatility resets and price action goes sideways. So that is kind of your mean reversion bounce, which that bounce, just so you know, took us up 25% on the daily. And what do you know? Stokes crossed up, but we didn't have the low volatility read. Anyways, the last daily volatility move, actually got it perfect here. So volatility extremely low. So again, what happened here? Volatility gets up to 10%, comes back down a little bit, and then explodes. So you're going to get the whole move by waiting for 20%? Probably not, right? So it would have been right in this region, which, did this move happen all in one day? Yeah. So we went from 10% to 20% in one day. And that one day of price action, well, it took us from, and this is on CMEs again. And where did the expansion start? So this is, again, similar to, I think, what's going on right now. Is if you began to take that long position right here as expansion started up. So very similarly, I'm going to just zoom in and really look at some detail here. So what happened? We're on the lows. We get expansion. We regain the exponential here and get a positive slope on the moving average. And why am I talking this all out? Well, it's good for myself, right? I like to remind myself of, what we're actually looking for. And at this moment here, you had the stochastics cross to the upside, cross to the upside, cross to the upside. We're getting, some higher lows. We got a higher high. And here was the reversal, right? So we put in the lower high. This is based on candle bodies. And then we get the lower low, lower high, lower low, and boom, down to the races. So what happened is Stokes crossed here to the downside, and that was right around the 60% read. And where are we right now? And I'm willing to bet we had some divergence alongside of that. So as price put in from this high right here to this high right here, we had a lower high. No, it was almost a higher high. Coming back from this point right here, you had 1, 2. Yeah, that was it. That was the move, right? So coming back from right here, we had 1, 2 lower highs in lower highs in price, higher highs in RSI. That's hidden bearish divergence, and confirmation on this candle right here, and we gapped down, and that was probably from Friday to Monday, June 10th. Let's see on the calendar, when was June 10th? Calendar. Oh, that's a calculator. Just curious because we are coming into the weekend tomorrow. June, so let me see this calendar. All right, I'll pull it over here. Day, we want to see the month. So June 10th was a Saturday, and yeah, the futures market opens on Sunday at 3 p.m. Pacific time. So what am I trying to get at here? Well, BBWP just got a positive slope. It's not above 20 percentile yet, so what could possibly happen? We get a bit of a fake out. So it comes up, comes back down, and then we get the real move on the daily time frame. And at that point, that's when I would be looking for I'd be looking for the Shmita to play out. Keep in mind, we're coming out of September, the worst kind of stock market closure in history. We just had 3 negative quarters of growth. 3 negative quarters on volume. All we're getting is a backfill on this little hammer candle on the monthly time frame. How would we confirm this as a local low? And we'd have several drives of hidden bullish divergence as we're making higher lows here and lower lows in price. And reminding myself here, we have this massive drive of bearish divergence on the 3-month time frame. Now, the thing with the 3-month, this is going to take months to play out, but minimum expectation for NASDAQ, this signature is going to get you, a move all the way down to that green 55. Wow, that's 50%. Sorry, that's 30% from here. And that is going to be are these the COVID lows? Let's see. And we have the same signature here. That's actually 4 drives of hidden bearish divergence. We got lower highs. And hey, that was confirmed right here on this monthly candle. It got you a shot down to the green 55. So I'm getting hungry, guys. It's 30 minutes in. We've been talking about Bitcoin for 30 minutes, talking about economics. Thank you guys all for, hanging out, watching the videos. Make sure you hit the like button. If you don't want to, don't hit it, but always helps out the channel to see some likes on there. And so again, what could possibly happen? We get this non-farms payroll number. And this is a really cool tool, just so you know, myfxbook.com. Check out the calendar. You can click on the events, get a little interesting. So a higher than expected figure would be bullish for the dollar, while a lower expected figure should be a negative for the dollar. So back onto the calendar here. the previous we're supposed to have a lower. So if the actual comes in higher than expected, higher than 265,000 tomorrow, which with all the other, you know, kind of news out there, non-farm payrolls. If it comes in higher than expected, more people will have more jobs, more money to spend and cause more inflation. That is the big caveat. So I would, you know, basically sum it all up, guys. You know, dollar goes up tomorrow, bad for Bitcoin. Dollar goes down tomorrow, good for Bitcoin. We're going to pop it back up. Let's take a look at Ethereum, and then, you know, again, just measuring out the moves for you. If Bitcoin does, you know, if we just see this continue to moon rocket up here, and momentum will be to the upside, as we were saying back here, though, you know, right in this region, same region, that's where it flipped around. As we started to put in some highs, we didn't even get up to the green 55 on that one, but look at how we reacted the last time we got in here. And we will have, you know, multiple drives of bearish divergence coming all the way back here on June 6th. That might be too far to go back, but you know, the 4 drives gets you the move to the bottom side of the range. Here's a, so we got 1, 2, 3, 4, 5, 6. I mean, the more drives of bearish divergence you have, the bigger the move is going. So even if we confirm any kind of a lower high, then really this pivot right here, if we can't get back above 31,920, then the move down is going to be massive. That's what I would say. Massive move down. At the moment, it looks temporarily like we want to come up to the green 55. And again, that is all hinged upon the fact, or the big X factor is the US dollar. And here's what I would say right now on the dollar. So on the daily time frame, we are coming. We haven't even had a weak bounce, right? So weak bounce is going to come up to 112, which it looks like we might be doing that right now. And strong bounce, not 0.5, the 618. That's where you would expect your lower high to come in. And then for, you know, the rest of the downside move to play out. Not very unlikely, given that the dollar has, you know, maxed out its volatility here and is now declining. So the mean reversion bounce here, again, as dollar's been going up, right, we expect it to come back down. All right, I've jabbered enough about Bitcoin, and really simply put again, on the 4-hour time frame, this is going to be the, you know, harbinger of death and despair, or peace and prosperity. Any kind of a 4-hour closure back below 19,690, and again, that's the green 55, and again, that's probably going to be right around the 0.5 of the 618, and that will confirm no drives of bearish divergence from that point, none from that point. Yeah, and that's the only thing making me think we're going to pick it back up here and, you know, probably do something like this. But below here, you know, at least gets this shot back to the bottom side of the range, around 19,000. And really, if RSI cannot take out this guy right here, it'll just be another drive of hidden bullish divergence. So just as we have multiple drives of bearish divergence on the daily time frame, well, on the 4-hour, from this pivot right here, coming back all the way over here, you just got a slew of hidden bullish divergence, right? So all of these lower lows are higher lows in RSI and vice versa. But you don't want to take those plays from a high level, right? If you're looking for bullish divergence, you want to see it come from a low level. So we're in the middle of the sand right now. We're in the middle of the market zone. The market doesn't know what to do. Okay, here's another thing I saw on, at least on S&P and on the Dow and the SPX, which was thinking, look, silver cross to the upside. So, but there is a gap right here. Gaps like to get filled. Does it get shot through and brought back to the downside? Very, very possible there. And you will have 1, 2, 3 drives of hidden bearish divergence, which was just confirmed on the 4-hour. And I would expect a move at least down to fill this gap here. That looks about right there on the Dow. And the S&P 500 has the same gap right here at 36.97. And we will cross down here below 37.05 on the next 4-hour candle. So a bit of a nothing burger, guys. I can say, probably, this is what's going to determine kind of the next move up to 21.5. And if that gets taken out to the downside, move down to 19,265. First target, second target, 18.5. So hopefully that helps you. I'm sure it doesn't. Ethereum is going to do whatever Bitcoin does, but more. But on the 4-hour time frame, you can see there is more clear hidden bearish divergence. Again, all the way back from this pivot, you'll have multiple drives of hidden bearish divergence right there. And how would we confirm this as a high? I'd want to see a closure anywhere below 1,356. So going in under the knife here, guys, today, do I want to have my positions on? Do I want to take positions off? I'm going to take positions off, go under the knife, hold my breath, and come back tomorrow and see what it does. Or come back this afternoon. More importantly, that's how fast I will be back in the worksheet. And I did draw this guy out yesterday, this little green box, which we came back and almost perfectly got it on the hourly time frame for XRP. For all you XRPers out there, it looks like a massive inverse head and shoulders to me. Possibly a double inverse head and shoulders. But yeah, this is what I was kind of looking at yesterday. And with a possibility to pop back to the top side of the range, I personally think it's going to get faded. I think everything's going to get faded. I guess I got my bear goggles on here, but what is an inverse head and shoulders? Well, let me draw it out for you. This would be your left shoulder, this would be your right shoulder, and this would be your head, right? And here's the neckline right here. That would be your neckline. And then how do you get a measure move off of something like this? Well, you would do that, and that'll get you right up to the highs right here. So I do believe there is a bit of a threat of that type of move. XRP has been pretty volatile. However, I did notice this as well. The hidden bearish divergence coming back from this pivot right here. So you would have this high right here, right? and a slew of lower highs. So where does invalidation on this move? 4-hour closure back below 47.21.1 should do it. And, you know, you could even as early perhaps start to, yeah, no, I'm looking for as early as a 4-hour closure back below this pivot right here. That would confirm this as a high. That would confirm this as a high, but invalidation of the head and shoulders is going to be a 4-hour below 47.196, and that would give you your target back to the bottom side. Okay, XRP. I want to do one last dive on Ethereum because the 2-day has had a volatility reset. So as again, we saw expansion to the downside and we've seen sideways consolidation. A mean reversion bounce here on the 2-day time frame, and we've been talking about Ethereum coming down to about $1,000 for some time. I do believe it will get there, even if we have one more run to the upside at 1,500. Why? Well, the 5-day, and this does lead me to believe, you know, any kind of a 5-day closure above here will confirm this as a local low, and you will have hidden bullish divergence coming back from this point. Price is making lower lows. RSI is making higher lows. So how do we confirm this as a local low? And that would be the 2-drive variety right there. 1, 2, and that would give you a shot up to $1,600. But what do we have on the other side? Volatility versus momentum indicator. Well, as volatility's been declining, we started expansion right here. Momentum is to the downside, and as long as Ethereum is below 1759, momentum will remain to the downside as volatility continues. That looks good for that move down to about $1,000, 1,058. So if you're a bear, you want the dollar to rally. If you're a bull on this market and you're the buy the dipper out there, you want to see the dollar come all the way down here to retest kind of this breakout level somewhere in this region between 104 and 102. But that still is not going to avert the crisis. Jerome Powell and good old Biden. I mean, when you look at that guy talk on the TV, you see exactly why the country is just going down, right? It is absolutely, the other countries are laughing at us, making fun of our president because they know he ain't running the country. He can barely put on his clothes. He can barely say his last name. All right, 40-minute rant for you guys this morning. I hope you have a blessed and highly favored day. Hope some of this makes any sense. And yeah, I'm going to wrap it up there. Thanks. Take care.